Hello and welcome to a brand new show of Market Makers. My guest on the show today is Arvind Sangar, Managing Partner and Founder of Geosphere Capital Management. Arvind, welcome to the show. Thank you for joining us. Arvind, if I map the current market environment, after the EU summit, reasonable amount of hope seems to be coming back. Risk on trade also has made a comeback. Do you think that trade is here to stay?
I would say that Europe has not found any magic bullet to permanently fix the issues that are overhanging Europe. So, Greece was a big problem. Greece seems to have receded into the background, but my sense is Greece is going to come back in the next couple of months as their numbers will continue to disappoint, and there'll be some issue there. Clearly, right now, Spain and Italy are center, Spain more than Italy maybe. And so the actions right now are to try to solve the Spanish, bank recapitalization problem. So I think that, we're in a new world. In this new world, we're going to have to get used to a set of rolling crises rather than saying, you know what, we can underline it and we can move on. So I think at some point the markets will get adjusted to the fact that, you are going to have this backdrop of debt overhang and issues related to that and structural issues in many parts of the world. So I don't think that's going to go away.
Arvind, most asset classes are up about 4 to 10% from the recent lows. Are you a bit surprised that all asset classes currently are moving in a synchronized manner, starting with bonds, equities, and now commodities?
I believe so. I still think that we are in a situation where global growth is decelerating. Certainly, U.S. is decelerating. Germany is also seeing some slowdown, but Europe in general is in a recession, and it's not about to get out of that recession anytime soon. UK is, also kind of, teeter-tottering in and out of recession. And China has been amazingly slow, and the real discussion now is whether China's growth bottomed in the June quarter or is going to bottom in the September quarter. And, the hope is that with some of the policy actions they're taking, that will hopefully turn up either in the third quarter or may turn up in the fourth quarter. And, similarly, if you look at countries like India, growth was slow in the March quarter. I'm not sure June quarter is going to be significantly better, and we'll have to wait and see what the second half brings. So, from a global growth standpoint, things are relatively shaky, and therefore that's one of the headwinds for, for global markets.
Arvind, these are clearly uncertain and difficult time for global money managers. So at a time when global nervousness is high, what's been your portfolio strategy? How are you putting your money to work, and where are you hiding?
Well, our portfolio strategy overall has been to look for, sectors where we think valuations are attractive and growth is going to surprise on the upside, because growth in this environment is a scarce commodity. And anybody who can provide upside surprise on growth is going to be rewarded very handsomely. So we are looking at things like, U.S. natural gas-related equities. We're looking at, some of the refiners, again, in the U.S. that are benefiting from a structural dislocation between Brent and WTI. But, globally, we are looking at companies that might, provide special situation opportunities because they have, either got a dividend yield story that is attractive, that is underappreciated by the market, because, again, yield is a very scarce resource. Or, there's some other growth dynamic. And one of the things that we are struggling with is that China's growth story has structurally altered. Not only is it moved to a lower growth rate, but it's moved to a much less commodity-intensive growth rate. Therefore, this super bull cycle on commodities, which was very much China-led, in the early part of the 2000s and all the way through 2007-8, and had a second brief run in 2009-10, is, frankly, in our opinion, over. So therefore, it is finding specific companies which have their own growth dynamic, which are not necessarily dependent on a big commodity bull market. So that, that's the other part that we look for. And then, where there might be policy action that might be helpful. So, at some point, is it too early or is it timely to look at some of the, Indian power or infrastructure-related companies where they could benefit from policy action? So, we're looking for stories like that rather than trying to make a big macro theme on most of the major commodities, at least certainly not the ones that China has been an engine for in the past.
Arvind, Indian markets are up by about 10% from their recent lows. Are you a bit surprised with the strength of the rally? Because things for India haven't improved at all.
Well, I think you could say the same about the U.S. market in the June quarter. It's going to be the first quarter, I think, in about 3 years where the expectations are earnings are going to be down year over year. June quarter last year versus June quarter this year, and yet U.S. equity market is within 5-7% of its 52-week high. So I think we've seen some resilience. People are looking for places to hide just because there's so little returns to be had going into the bond market. So I think that the Indian market has benefited a little bit from maybe some perception and hope that with the recent statements by the Prime Minister that there will be some policy action. Plus, it is also a significantly under-owned market as far as global investors and even Indian equity investors. They're pretty much, a lot of people have exited the market. Therefore, I think, valuations are not compelling by historical measures, but they are cheap. And people are looking for, any catalyst that might provide upside. So I think one of the challenges in a market where liquidity is still around, but there are no easy places to hide, is you're going to get these sharp trading rallies. And the thing to figure out is how far to let these trading rallies run, and whether or not there's a fundamental change in equity environment. And at least at this juncture, we don't see a fundamental change in equity environment either for India or for global markets. Now, if India did something dramatic on the policy front, maybe we could change our mind. But right now, it's more a trade based on hope and maybe some expectation of some modest delivery on some policy action.
Arvind, you mentioned that you're pretty optimistic that the news flow from New Delhi will improve or could improve. So what, to your mind, could be a big game-changing reform for Indian markets?
Well, game-changing move would be a set of policy announcements which suggest significant deregulation and significant, tackling some of the kind of holy cows, one of which is obviously the whole subsidy situation on fuel, subsidy situation on fertilizer, and also, I guess, encouraging foreign FDI and things like retail, obviously, and taking some meaningful policy action on the whole logjam in the whole power, coal, infrastructure sector. So, if you had a comprehensive set of things which addressed many areas at the same time, which I think would be hard for this government to do given their political compulsions and their coalition and what have you. But if you got meaningful enough, obviously you're not going to hit all the points that I just laid out. But if you got enough of those where people could look forward and say, this is going to help business confidence reemerge, investment cycle to restart in India, and the deficit to seem like it's going to come under some kind of control, and therefore the crowding out effect become less painful, and therefore RBI, it gives room for RBI to embark on a more predictable easing cycle. If all of those things happen, then you could have a real meaningful way to buy into the Indian market and count on a sustained rally. But again, frankly, I'm not there yet, and I guess like a lot of other investors, so far we've been underwhelmed by everything that the government has done versus all the things that it's promised.
Arvind, Indian markets have been stuck in this 5,100 to 5,400 range for last 6 months. When do you think we will snap out of this range?
My sense is, given the current environment, with some modest policy actions, we could definitely get to 5,500, and again, in a benign environment. On the other hand, I remain nervous that Europe is going to have other negative surprises along the way, and if you've got other negative surprises from Europe, and I think the U.S. data is going to continue to be showing deceleration in the second half because of the concerns about the fiscal cliff. And if you've got that kind of a risk-off environment, and if India again disappoints in terms of talking a lot but not doing much, then you could get the market dip back below 5,000 on the lower end. So I think there's still a wide range of outcomes based on both global macro and India-specific factors.
Arvind, the consumer staple stroke consumer discretionary trade, which has been a very popular trade and a resilient trade for this calendar year, your view is that that trade is now reversing. So what is making you bearish on consumer names? High valuations or over ownership?
I think a little bit of both. At the end of the day, when I look at valuations of Indian consumer stocks, where everybody is hiding, they're trading at historical close to peak premiums to the market and to other sectors. And clearly a lot of good news is pricing of people hiding there. The reality is that when I look at wage inflation by any specific sector, whether it is the IT or any other sector, wage inflation this year will be below what CPI inflation will be. So therefore, the idea that the consumer is bulletproof and that's going to keep going, I think is based on a false assumption, and therefore you could see some disappointments there. And if you get any policy action on the power/infrastructure side, which I think is clearly, if the government is serious about doing something, that's the most obvious area they have to focus on, then you could see a massive, or at least a meaningful shift in investor sentiment from where they're hiding right now towards that. So it's not something that I've got a big bet on, but it's something that we've at least nibbled at and look at as something that could be one of the big surprises over the next 6 months, provided, of course, that the government does follow through with some modest actions.
So Arvind, let's talk about specifics. Give us a flavor of your India portfolio. What are your overweight positions, underweight positions?
Well, I don't like to talk about specific names. So I've already talked about the power sector is one that we have some interest in. We're also looking for maybe FDI and retail getting allowed, and therefore we have a bet in that area. We own the only oil and gas company in India that I think you can play for production growth without having to worry about policy action. So we found some companies that we think are oversold, and therefore we have more company specific rather than big macro sector bets.
Arvind, stay with us. Let's take a break. When we come back, focus will tilt global commodities and a word on Asian markets. What's the way forward for Asian markets?